Right? So in the previous class, we discussed the error correction. Now today, I was planning to discuss some of the other areas in prime entry books. Okay. So in the prime entry book tude, the part 2, second part 2, you can take question number 13. We are going to do a past paper question, 2015 A level, part 2. Right? Okay, so let's read the question. Situm commenced a trading business on 1st of March 2015 by investing 600,000 from his personal saving. A summary of transactions carried out during the month of March 2015 is given below. So commenced 1st of March and the transactions are given for the month of March. Cash received and payments during the month is given. Sales 1.8 million. Cash received from debtors 5.6 million. These are receipts. And the payments are given. Purchases, cash paid to creditors, and expenses. While a cash discount of 400,000 was received from the creditors, so that's the discount received, and cash discount of 200,000 was allowed to debtors, so discount allowed. Totals of other prime entry books: purchases journal, sales journal, purchases return, sales return, return outwards and return inwards. As at 31st March 2015, end of the month, the balances of the creditors control account and debtors control account did not agree with the totals of balances of respective subsidiary ledgers. The subsequent investigation revealed the following. Right, so debtors control account and the creditors control account did not agree with the subledger individual totals. And there are 3 errors, 3 differences. Purchase of a lorry 1.8 million on credit has been recorded in the purchases journal. So here this purchases journal include 1.8 million, which is a purchase of a lorry. Bad debt 100,000 written off during the month has not been recorded in the books in the debtors control account. So we need to record the bad debt. The total of the sales return journal 200,000 has been recorded in the debtors control account as 2 million. Right? So that was recorded in the debtors control account as 2 million. Okay. So first requirement, cash receipt journal and the cash payment journal. So shall we draw a cash receipt journal and a cash payment journal for this question? 2015 A-level. 2015-11. Right. So what we need is a cash receipt journal and cash payment journal. So I put the format from one of the previous questions. Cash receipt journal, cash payment journal. So we are doing the question in thousands. Rupees 1,000. This is note number 2. Prime entry books, part 2. Part 2, question number 30. So this question is in prime entry books tute. Prime entry books, part 2. Part 1 is source document, part 2 is prime entry books. In that, question number 30. This part 2 prime entry books. In this question number 13, 2015 A-level paper. So this is the way that you get the questions. So now we did separately the control accounts, error corrections we did separately, preparation of cash receipt journal, cash payment journal is done. Right. So in the A-level papers, the past paper questions we have all together. So they add, sometimes the accounting equation will be added, sometimes the bank reconciliation will be added. Right. So it's a combination. Right. Now let's do cash receipt journal, starting with initial investment. Sifun commenced a trading business on 1st of March, investing 600,000. So it is capital 600,000. Other receipt. Then we have sales 1.8 million. These cash sales 1.8 million. Then from debtors 5.6 million. 5.6 million. And the discount received from creditors and cash discount allowed to debtors is 200. Discount allowed is 200. And we can calculate the total values. This is the cash receipt journal. Very simple. We have done much harder questions than this. In the cash payment journal, purchases 1.2 million. Purchases 1.2 million. Credits 3.4 million. Discount is 400. Then we have expenses. Expenses 1,400. 1.4 million. So those are the cash receipts and payments. So when you look at the question, it seems like big question, but it's a very basic, simple question. Okay, so now you can calculate the total values. Okay. So this is cash receipt journal and cash payment journal. Now let's do the journal entries to rectify the errors. Narration is required. And if you don't write the narration, they will reduce marks. Okay, now let's draw a journal, a general journal. General journal. Draw a general journal. So there are three errors. general journal for the rectification of errors. A. Purchase of a lorry 1.8 million on credit has been recorded in the purchaser's journal. If it is recorded in the purchaser's journal, if the journal is wrong, if the prime entry book is wrong, that will be recorded as purchases in the subledger as well as general ledger. That means individual account also it is recorded as purchases, and control account also it was recorded as purchases. Right? So if it is recorded in the purchases journal, the double entry will go as purchases account debit and creditors control account credit. It was recorded in purchases account debit 1800, creditors control account credit 1800. This is how it has been recorded. But this is not purchase of trade creditors. This is not purchase of inventories. This is purchase of a lorry. When you purchase a lorry, it is a fixed asset. So that will be recorded, that should be recorded in the motor vehicles account. So how do you correct it? So first we need to remove this from purchases account and trade creditors account. Right? So, trade creditors account, creditors control account, we have to debit 1.8 million. And purchases account, we have to credit 1.8 million. This is removal of removing from the purchases. There is a question. Explain it again. So let me take the working. So if you record the purchase of lorry in the purchases journal, that has been recorded to purchases account in the general ledger. Purchases account will be debited 1.8 million and trade creditors control account will be credited 1800. Right? So this is not purchase of inventory. This is purchase of motor vehicle. So the correct double entry should go to motor vehicle account and correct double entry should go to motor vehicle account. Creditors, or we can say payable for motor vehicles. So that's the other creditor, other payables. This is other payables. Right. So what is the correction entry? First, remove from purchases account and remove from trade creditors account. That's the removal entry. Okay. Then you have to record the correct entry. Correct entry is motor vehicle account debit, other payable credit. So that's the correct double entry. So there are 4 entries required to correct this error. First, removal from the purchases and recording the correct entry of motor vehicle purchases. Right? Okay. Trade creditors account debit, purchase account credit, then motor vehicle account debit, motor vehicle payables, credit 1.8 million. Okay. So correction of purchase of lorry. Recorded in purchase journal. Correction of purchase of lorry recorded in purchase journal. We are doing the error correction part. Next, B. Bad debt 100,000 written off during the month has not been recorded in the debtors control account. So if it is not recorded in the debtors control account, we have to record it. Double entry for bad debt is bad debt account debit. Bad debt is an expense, therefore expense account debit. Debtors control account will be credit. Debtors control account. Debtors will reduce. Okay, so bad debt account debit 100,000. Debtors control account credit 100,000. So this is credit means we have creditors correction of, or we can say recording omitted bad debts in the control account. Recording the omitted bad debt in the control account. Now I have another question. Let's say a transaction is omitted in the individual account. Let's say this bad debt is omitted in the individual account. So my question is, do you adjust it in the general journal? Yes or no? Do you adjust? No, we don't adjust it. So as I said earlier in the when I do the error corrections, now we are preparing only the general ledger. Right? So we assume that the sub ledger, debtors or creditors ledger is prepared by another person. Right? So we can't do any adjustment for that. That is why we are preparing a reconciliation just to compare. Like we did for bank reconciliation, bank is doing the bank statement. So likewise, debtors ledger is done by another person. So we can't do the error correction if there is anything in the sub ledger. We can do only general ledger corrections. So keep it very clear. Oh, sorry, this is yes. Bad debts 100,000 written off during the month has not been recorded in the debtors control account. So it's not recorded only in the debtors control account. So this is not bad debt. This should be not bad debt. This should be suspense account. Suspense. I'll repeat it again. Now here, the bad debt written off during the month has not been recorded in the control account. So they have said not recorded only in the control account. So we have to assume that bad debt account is correct. Bad debt account is correct. Therefore, debtors control account will be credited and suspense account will be debited. And what I said earlier was, if there is any error in the individual account, that will not be recorded in the general journal. If there is any error in the individual account or the sub ledger, those errors will not come under general journal. Only general ledger errors or control account errors will be corrected through the general journal. Okay. Right. Third one. The total of the sales return journal of 200,000 has been recorded in the debtors control account as 2 million. Total of sales return journal. So if you see the sales return journal, the balance is 2 million, 200,000. But when they are recording it in the debtors control account, they have recorded as 2 million. That is also in the control account. How do you correct it? What is the correction entry? Suspense account debit or credit? It's a sales return. Suspense account and debtors control account. Debtors control account, credit or debit? Debtors control account should be debit. Yes. So debtors control account, because it's a credit entry, credited more. You have to credit 200, but you have credited 2,000. Therefore, debit the excess amount, 1,800. Debtors control account debit, suspense account credit, 1,800. Correction of sales return 200,000. $2 million. Recorded as $2 million. Right? The excess amount in debits. Right. So if you take debtors control account, they have credited 2,000. So actual amount is not 2,000. This is sales return. Right. So actual amount is 200, but credited 2,000. So how do you correct it? 1,800 you have to debit. Right. It's a credit entry. Sales return is a credit entry for the debtors control account. Okay, let's move to the third part. Now this is done. General journal. General journal is done. Now they are asking us to prepare the creditors control account and debtors control account after rectifying errors. So after rectifying errors means we need to do the before rectifying errors as well. So I will do both. Then it will be clear. So can you all give a try? I'll give 2-3 minutes for you all to try this. Prepare the debtors control account and creditors control account after rectifying the errors. Or you have to do before and after both. Cash received from debtor is a cash received from debtor, debit cash, credit debtors control account. In debtors control account, it's credit. Debtors control account. Debtors control account. There is no opening balance. Debtors control account and creditors control account. So in the debtors control account, before that, with the errors, that means before correcting the errors, there is sales. You need to record the sales, then the cash received, discount, love, discount allowed, and sales return. in the creditors control account, we have purchases, cash, discount receipt, purchases return, and the balance. And after that, we have to do the revised control account for debtors and creditors. Now let's prepare with the errors. So what are the errors? Debtors control account. Sales 1.8 million. So there is nothing wrong in this. They have taken 1.8 million. Cash received from debtors. Sorry, not 1.8 million. Sales is 10,000. Sales. Cash received is 5.6 million. They have taken that amount. Discount allowed is 200,000. Sales return. Now there is an error. The total of sales return 200,000 has been recorded in the debtors control account as 2,000. So this is an error. And the bad debt also not recorded, so we are not recording the bad debt. So with the error, the debtors control account balance will be 10,000 minus 2,000, 7,800, so 2,200. That's the debtors control account balance. And creditors this is the wrong balance. This balance is wrong. Okay, we prepare with the errors. There are two errors in the debtors control account. One is this sales return. The one is bad debt, not recorded. Sales return recorded as 2,000, 2 million. The creditors control account purchases 10,800. That is an error. These are errors. Cash received, cash paid is 3,400. Discount is 400. Purchases return is 300. Therefore, net 6,700. So this is with the errors. Now I have prepared the debtors control account and creditors control account with errors, with the error. Now we'll do the corrections. Corrections are here in the general journal. So what are the transactions which come for the control accounts? Here we have 1.8 million debtors control account, 100,000 debtors control account, and 1.8 million again debtors control account. So into the debtors control account, we have to credit, there is a bad debt of 100. And overcasted is sales return 1800. Now this sales return has been overcasted, so that we have to correct it, and omitted bad debt we have to record. Then if we record that, we can get the closing balance. $3,900. So revised debtors control account, the balance is 3,900. And there is one transaction goes to the creditors control account, which is creditors control account debit 1.8 million, which is motor vehicle. Motor vehicle purchases were credited to the creditors control account. That has to be debited. And the balance closing balance is 4.9 million. So this is debtors control account. Revised balance is 3.9 million. Creditors control account revised balance is 4.9 million. So that is how you correct the error. Any doubts? There is a question. Motor vehicle 1,800 in creditors account. Can you explain it again? Yes, now this purchases journal has 10,800. The purchases journal, this has 10,800, right? That includes the motor vehicle. Because they're saying purchase of lorry 1.8 million on credit has been recorded in the purchases journal. So actual purchases is not 10,800. It should be 9,000. So that is why from this deduct 1,800 debited. Then it becomes 9,000. That's why we have adjusted it. Right. So let's move to the next part. Now the next part under the prime entry book is preparing the trial balance. Trial balance. Part 6. Okay. So we'll do the basics of this as well. Then we will move on to all the other questions in the prime entry books. Okay, so I will explain the concept behind this. Once we are done with the prime entry books, we have to prepare the basic, the trial balance, and from that we prepare the financial statements. So that's the complete process. And after that, it completes the accounting process. Right. So in prime entry books, we have the cash receipt journal, the cash payment journal, right? The bank, the petty cash payment, purchases, sales, return inward, return outward, and the general journal. So by taking the balances from these prime entry books, we prepare the ledger, right? The general ledger and sub ledger. From the ledger, we have to prepare the trial balance. Right. So trial balance will have all the ledger accounts. There are 5 types of ledger accounts: assets, liabilities, equity, income, and expenses. So by taking the income and expenses, we can prepare the income statement, and taking the equity, assets, and liabilities, we can prepare the balance sheet or the statement of financial position. Right. So this is the process, accounting process. We started with source documents, and we did the prime entry books and ledger accounts. We also did general ledger and the sub ledger. Now we are here preparing trial balance, income statement, and statement of financial position. Okay. So let's do a question from the trial balance. Source documents means not transaction. Source document means the proof documents, the receipts, payment vouchers. Right? So the way you identify the transaction. You identify the transactions through the source documents. So we will do this question. There's a question under what purchase order belongs to. Purchase order belongs to purchases journal, credit purchases. Okay, now we'll do this question. 2020, then it's a AAT paper. After that, we'll do A-level questions. Okay, we'll do a simple one, then we'll come back to the difficult questions. Right. So here's the question. Praveen started a sole proprietorship. Praveen Traders. On 1st of April 2018 by opening a bank account, investing 2.5 million. So that is the investment made by the owner. Cash transactions made during the year. Capital introduced 2.5 million. Cash sales 1.3 million. Received from debtors 831,000. Cash payments, motor vehicles acquired 1.5 million. Payments to creditors 1,150,000. Electricity, salaries, borrowings, cash purchases. The policy of the business is to provide depreciation on motor lorry at 25% per annum. Receivables and payable balances are given. Trade debtors, trade creditors, accrued salaries. There were no stock as at 31st March 2019. Prepare trial balance. Right. So in the book, write the heading. Preparation of trial balance. Annum means 1 year, yes. Write the heading. Preparation of trial balance. Okay, then you can write this. Okay, let's do this example. Through the example, I will explain. Question number 1. Tute number 4, part 6. Trial balance and financial statements. This is the tube. Right, so I'm doing the question number 1. We need the trial balance. Okay. So draw a trial balance. With debit and credit. And also we need the ledger accounts. We need ledger accounts. For trade debtors, trade creditors, and accrued salaries. So here's the format. We need ledger accounts. Ledger accounts for trade debtors control account. So how do you decide the ledgers? We decide based on if there is any opening closing balances. For them only we prepare the ledgers. Other transaction you don't need a ledger account. Salaries. And also let's prepare a cash account as well. So it's better to complete the ledger accounts first. Debtors control account. Opening balance is 0. There is no opening balance. Then you need to find out the sales and cash received from the debtors. And the closing balance. So can you give a try on that? Creditors control account, opening balance, then we need purchases, cash, balance. So first let's do these two accounts. Creditors control account. No opening balance. Cash received from the trade debtors 831,000. 831,000. Then the closing balance is given 145,000. 145,000. Now there is no any other transactions related to the debtors. Therefore, difference will be considered as sales. Difference is considered as sales. 976 is the total credit. So since there is no opening balance, the same amount will be considered as sales. Sales is 976. Then we will do creditors. Closing balance is 110,000. Cash is given in the cash controller, cash receipt. 831. Payment creditors 1150. Therefore, purchases 1,260,000. That's the purchases. 1,260. There's a question, how did you get sales 976? Sales 976 means credit side is more. So credit side total is 145 plus 831. So you write it here, and the difference is 976. So if you can remember the first question I did under debtors control account format, we calculated the sales. So if you know all other details, the difference will be the remaining, the missing transaction. We also say debit side is more, we take the same amount to the credit, then difference is purchases. In the salaries account, first let's record the salary expense paid. Salaries and wages, paid amount is 290,000. So cash account is credited, salaries account will be debited. Salaries account will be debited 290,000. And this we took, this also we took. Accrued salary 38,000. That means the closing balance is 38,000. That's the payable. Balance carried down, liability 38,000. So 290 paid, another 38 is payable, means the salary expense for the year will be the addition of these two. So salary expense for the year is 328,000. 290 paid, another 38 is payable. So total salary for the year is 328,000. And also we can do the cash control account. All the receipts, there is no opening balance. If it is a prepaid balance, it will be debited. There is a question. If it is a prepaid balance, then it will be debited balance brought forward, and it will be credited as balance carried down, and the difference will be changed. So here it's accrual. Cash control account, all the receipts 4631, and all the payments you can credit. You just need a summary account 3975. Just to calculate the closing balance. $600,000. 656. Closing balance is 656. That's the cash balance. Okay, so that's all. Now first, we can record the closing balances. Closing balances. Right, I will start from debtors. Trade debtors. 145,000. Then trade creditors. So credit balance 110,000. Accrued salary 38,000. Then we have calculated the cash balance 656,000. So these are the closing balances. I'm taking from the ledger accounts. Right, we took the closing balances. $145, $110, $38, and $656. Now you can see we have calculated differences. From the debtors control account, we calculated sales. Creditors control account, we calculated purchases, credit sales and credit purchases. Now let's record the sales and purchases. Sales. From the debtors control account, we have calculated 976,000, which is credit sales. In the cash received, we have cash sales 1.3 million. So we will record the total sales. Here the cash sales 1.3 million. So total sales 976,000 plus 1.3 million is 2,276,000. That is the total sales. Purchases also same. Cash purchases 788 plus 1,260. $788 plus 1,260. 2,048,000. Salaries. We got 328,000. So how did we get 328? It's paid amount 290, and we added the payable balance 38. That's how we got 328,000. 328,000. 328,000. Right. So this is the main part. And from the remaining transactions, from the cash receipt and payment, we have to take them to the trial balance. What do we have? We have capital 2.5 million, 2,500. Motor loan, or we debit to the motor vehicle account, 1.5 million. Motor lorry or motor vehicle 1.5 million. Electricity 72,000. Space depreciation I will explain at last. Electricity 72,000. Drawings 175,000. Purchases we took. Then there is one more adjustment. The policy of the business is to provide depreciation on motor vehicle at the rate of 25% per annum on the straight line basis at cost. Right, so depreciation still we didn't do, but I will be doing it soon. Here, just to understand the basic, when we are using the asset value will depreciate. Asset value is reducing. That is called depreciation. So annually 25%. Right. So let's do a working motor vehicle depreciation. Depreciation is calculated cost into depreciation rate into number of months. Into period. So here the cost of the motor vehicle is 1.5 million. Depreciation rate is 25%. Multiplied by number of months. The period is starting from 1st of October 2018 to 31st March 2019. October, November, December, January, February, March. Only 6 months. So you have to multiply by 6/12. So the answer is 1.5 million into 25% divided by 187. Depreciation is 187,500. How I found the month is it was purchased on 1st of October 2018. Year end is 31st March 2019. So from 1st of October to 31st March 19, there is 6 months. So 25% is for 12 months. That is why divide by 12 and you calculate for 6 months. October, November, December, January, February, March. 6 months. So we calculate 187,500 as the depreciation. Now the double entry for the depreciation is depreciation account debit, provision for depreciation account credit. That's a double entry. Right? So we will write motor vehicle depreciation debit 187,500. Motor vehicle provision for depreciation credit 187,500. That's how you do it. Just record the double entry for that. That's it. Now we balance this. Total debit should be equal to total debit. Balancing for 5,111,500. So this is preparation of trial balance. These are very basic questions. So we did the debtors control account, creditors control account, right? The cash control account. And using that, we can prepare the trial balance. There's a question, so why you have included period in depreciation calculation? Because depreciation rate is given for 1 year. If we are calculating depreciation different time period, now 25% per annum. Per annum means for 12 months. Now we are calculating only for 6 months, so half of that. That is why we multiply that by 6 over 12, the period. So this is preparation of the trial balance. Shall we do one more question? Let's do question number 2. Any doubts? Any other questions? Let's do the next question. Right. So let's read the question. Vijay started a sole proprietorship Vijay Hardware on 1st of April 2018 to sell hardware items by investing 1.4 million. That's his investment. The details of his initial investment made on 1st of April are as follows. So he has invested a motor lorry and also cash. Cash is 650, motor lorry is 750. In the cash receipts, cash payments are given. There were no stock as at 31st March. Bank loan 500,000 was obtained on 1st of March and interest is 18% per annum. And the repayment are to be made from 1st of April. In the receivables and payables, accrued electricity, trade debtors, trade creditors, similar transaction. Same thing we did in the previous question. Motor lorry is depreciated 25% per annum. Prepare the trial balance. Okay, shall we start? Draw a trial balance. Better to write the full name. This is Vijay Hardware. Trial balance as at 31st March 2019. Then we also need ledger accounts, electricity, debtors and creditors. debtors control account, creditors control account, electricity expense account, cash control account, cash control account. As we did in the previous sum, let's start with ledger accounts. Okay, so shall we start? Debtors control. Right. So let's start with debtors control account. It's no opening balance because this started during the current financial year. So we need sales and cash. So in a debtors control account, these are the four main transactions: opening closing balance, cash, and sales. So the cash amount is given. Received from trade debtors 1.3 million. Closing balance 275. 275. Cash received 1.3 million. So we can find out the difference. $1,575,000. That's the difference, and this is the closing balance. Okay. So this is credit sales. This will be added to the cash sales. In the creditors control account, there is no opening balance. Closing balance is 225,000. 225. Purchases and cash. 3,280,000. Difference 3,500,000. Closing balance is 225. Purchases 3,500,000. Same like the previous question. Then the electricity, cash 68,000, payable 18,000. Closing balance 18,000. So total electricity expense for the year is 86,000. In the receipts and payments, 4,950 is receipt. Payments 4,158. $792. So we took these balances. There's a question, so no need to add balance brought forward cash. Balance brought forward cash only this 650. So again, you don't need to add. This is the initial 1st of April cash introduction. So it is not a separate transaction. It is the same balance. There is no opening balance in this. Started 1st of April. Year end is 31st March. So there is no opening balance. All what they received is recorded in the cash receipts. 4,950 includes the investment of capital as well. Okay, then we will record the transactions. Take the balances, the closing balances from these ledger accounts. Debtors. Debtors 275, creditors 225, accrued electricity 18,000, cash 792. Now sales. Cash sales 2.5 million plus credit sales 1,575,000. Purchases only credit purchases. There is no cash purchases. Electricity. $86,000 debit. So that is from the ledger accounts. Now in the question we have taken cash sales. These amounts are taken. Now let's take the capital. Capital is 1.4 million. And he has also invested a motor vehicle. The cost of the motor vehicle is 750,000. Cost of the motor vehicle is 750,000. It is this amount, motor vehicle 750. Then we saw that there is a depreciation. Motor lorry is depreciated at 25% per annum at cost. So this was invested on 1st of April. Therefore, the depreciation should be calculated for 1 year. Motor vehicle depreciation is calculated for 1 year. 750,000 into 25%. 187,500. So motor vehicle depreciation account debit, motor vehicle provision for depreciation account credit, 187,500. That's the depreciation of motor vehicle. One year depreciation. So this no transaction for this. Then we have salaries and wages. Let's just call it 600,000. Drawings 210,000. Electricity, we have taken the balance procurement here. Electricity comes 68,000 plus 18,000. That's how 86,000 came. Electricity 68 plus 18. That's the amount we did from the ledger account, electricity account. Drawings 210. Now there is one more last transaction, which is bank loan. A bank loan of 500,000 was obtained on 1st March 2019 at the interest rate of 18% per annum, and capital repayment are to be made from 1st of April. After 1 month only, we have to pay the bank loan. We have to start repayment of bank loan. So this is 18% bank loan. The full amount is a liability, 500,000. Still, nothing is paid. Payment will be started by next month, next year. So if 18% interest, we have to pay the interest. So what is the duration for the interest? 1st of March to 31st March. 1st of March to 31st March. Year end is 31st March. So how many months do we need to pay interest? Bank loan interest. It's from 500,000 into 18%, only 1 month. Only 1 month interest. So the double entry is still the interest is not paid. $7,500. So interest account debit, interest expense account debit, bank loan, interest payable account credit, 7,500. Expense account debit, payable account credit. Still, it has not been paid. If we balance this, $6,413. Bank loan, there's a question, bank loan, can you explain it again? Yes. Bank loan is 500,000. 18% bank loan was taken. Here is the bank loan. This was taken on 1st of March. Year end is 31st March. So 1 month we need to pay interest. Interest and the bank loan was paid starting the payment on next year, 1st of April 2019. So at the end of 31st March 2019, this 7,500 is payable. The payment is done next year. It is to be paid from next year, but the duration comes for this year. 1 month. 1 month interest is payable. So in capital we have included motor vehicle amount. Also then why we are adding another? Yeah, double entry. There is a question. In capital we have included motor vehicle amount. Yes. In capital, this 1.4 million means it is cash plus motor vehicle. So the double entry for the investment of capital account credit, right? Motor vehicle account debit, and cash account already debited. This 792 includes this cash. This 50 cash account is debited. In cash account, there were more transactions. That is why we calculated separately the cash control account and took this balance. But motor vehicle, there was no other transaction, so we directly took the total amount to the trial balance. That's the double entry for motor investment. So due to the double entry system only, we record separately the motor vehicle account, motor vehicle cost. So any other questions? Any other questions? Is it clear preparation of trial balance? Basic questions, right? You can do the remaining questions in the tube. Similar type of questions are there. So there are some good questions that you can try today. All related to trial balance. Right, so you can do these questions. Then after that, I will explain, in the next class, I will explain the preparation of trading profit and loss account and statement of financial position. And try these MCQ questions as well. Yeah. So you all can do these remaining questions. And in the next session, I will focus on some complex areas. Right. Any other doubts?